I thought we were just good to see you.
Hey, welcome YouTube and Mr. Tommy T. What's up, dog?
What's going on?
How are you?
Life is good. It's getting cold. Fall was about 10 minutes over here. We're right back to 30 degrees and already getting snow. How are you doing?
I'm amazing. Life is fantastic. You know, the real estate market is hotter than it's ever been. No, here's the beautiful thing about my life. Okay. I'm a wholesaler. You know what wholesalers don't do? Lose money.
Yeah.
The reason why we don't lose money is because we don't own anything. we generate capital. We are always trading on the way up. We trade on the way down, and it doesn't matter which way the market is going. We trade, and so because of that, even though a lot of people have a lot of losses that they are going to be able to book for the year, your boy ain't. Your boy ain't gonna book no. Actually, that's not true. I got two projects that I'm gonna miss a couple teeth on. But overall, in my flipping business, we're gonna be so net positive that it's still not gonna be a loss that I can book. So I can't count that as an actual loss.
I don't think I told you this, but my wife got her real estate license a couple months ago, and she's been going through these. The brokerage she's with has these weekly trainings, and she called me earlier today and was like, they're talking about nothing but seller finance. They're saying how popular it's going to be. And I was like, well, I know a couple guys in the space that could help with the creative stuff.
Seller, in fact, right now, this is the reason for this live stream. So guys, welcome to this live stream, which we've titled Take Jamil's Taxes to Zero. How are we going to do that, right? And let me give you guys a little bit of backstory. So my last tax bill was $775,000. Okay. Down from a little over $1 million in the last one. So I did a good job. I lowered my tax bill at roughly $300,000. So I did good. I did good lowering my tax bill about 300K. Not enough. Okay. I've got to lower my tax bill down to zero. Now we've got some interesting, schools of thought on how one can do that. Right. We were just talking about possibly buying some houses, seller finance, owner finance, and catching depreciation from that. I think that's a tremendous approach. And, obviously I'm partnered not partnered, but I'm positioned near the master of owner seller finance and subject to in the entire space, Mr. Pace Morby. So him and I are getting into a deal right now in Tempe, Arizona. I'm gonna give you the details of this deal, Tommy. And I want you to tell me what kind of tax benefit this is going to give us. Okay. So Pace are going to raise capital for this deal. We're going to come in as general partners. We're going to get 40% of the deal in order to raise the capital. The down payment raise is going to be roughly $2 million. Okay. Now, in return for helping raise the $2 million, we're going to get 40% of the deal. It's a $7 million building. Okay. So a $7 million building, it's going to have attached financing at 3.6% for 6 years. So we don't have to go out and get a loan, which is tremendous. So it's got seller financing attached. We're going to take it over. We're going to assume the loan, actually, not even sub to. We're going to assume the loan. So, Tommy, with that $7 million purchase, and I'm not putting any of my own capital in, I'm going to get 40% ownership of the project to raise the capital.
Awesome.
And it's 40% of the 30% that the general partners are getting, if that makes sense.
Got it.
Okay. So once we do a cost seg and we do accelerated depreciation, what can that possibly decrease my taxes to? Any idea?
I mean, with the tax bill that you have coming down to $700,000 with the $7 million building, once you do a cost seg study, that could easily take you down. I'd hate to say 500 grand, but I think it really could. So let's cut that in half. Let's say, conservatively speaking, $250,000 of savings.
Incredible.
The ownership. It'll be massive with a cost seg that big.
Beautiful. I want to give you another situation I'm in right now. So I participated in multifamily syndication. It was another. It was the total. Let me get the entire totality of that one.
Congrats, by the way.
Thank you. It was a $6.7 million purchase on the second. Okay. And I put in only $250,000. Okay. I'm an investor on that deal.
Okay.
And there'll be a cost seg and accelerated depreciation. So they're going to give me a K1 for that. Any idea what that can minimize my tax bill to? Or decrease my tax bill?
Do you mind sharing what percentage of ownership that
10%.
is? 10%. So it's probably going to be similar. I mean, both buildings you're looking at $7 million. So depending on the age, the reality is they're both 7 mil. So what's the square footage? How many units? I think both of them you could be looking at a $200,000 to $250,000 savings just doing estimates.
Amazing.
That's amazing for sure.
So guys, if you're not paying attention to what we're talking about right now, we're talking about a strategy that I learned from PCS, okay, called cost segregation and accelerated depreciation, something I knew nothing about before I send my last check to the IRS, mofos. I knew nothing about this stuff, and it wasn't until I got to meet these incredible human beings at PCS, Prime Corporate Services, that gave me the idea to start getting involved in these multifamily projects that have high dollar values in them, so I can get some huge depreciation benefits. Now, if you guys didn't hear what I just said, if I'm going to invest $250,000 in a project, which over, say, 18 months is going to return me roughly 300 to 325. Okay. In the meantime, next year, it's going to save me $200,000 potentially in taxes. So my $250,000 investment makes me another $75,000 in a return. Plus it saves me $200,000 in taxes.
Probably at least.
At least. So guys, can you start to think about the power of this? Why this is so important? It's not about the money you make, guys. It's about the money you keep. And you can place some of the money that you keep in vehicles that can allow you to keep more of your money, right? This is what we're talking about here. We're trying to minimize our taxes down to nothing. Okay. And each and every one of you guys can accomplish the exact same thing. You might say to me, Jamil, we're not going to ever have $1 million tax bill. Shame on you if you think that way, because you should absolutely be thinking in the terms of you will one day have $1 million tax bill. Okay. We are in the same world, we are talking about the same things. Okay. We are doing the same business. There is no reason why you can't have $1 million tax bill. But what we want to do is remove this. We want to remove this situation from your life where you don't do what I've done and pay millions of dollars to the government that you didn't have to do. Okay. That's extremely important.
One thing that I want to add to that as well is because of the way that you're passively going to be generating the income. So you're taking that depreciation accelerated up front. So you're saving the money on taxes with the income that you've generated.
Right.
You're getting paid out passively as well. So as opposed to that being taxed 10 to 37% for you, 37 and above, because of being in the highest tax bracket, that passive income is taxed 0 to 20%.
Right.
You take the accelerated depreciation for the savings, and then you also have a 17% haircut on the way that income is being distributed back to you for the long term. So there's savings on both sides for sure, which is amazing.
I love this. So Tommy, with this now in play, we've got some investments happening. I'm starting to place my money in the appropriate vehicles. Okay. What are some other ways for me to create or save some taxes, right? We've got some folks here that have joined us from my audience that want to know, it's coming around the end of the year. Okay. And I want to help. I want to get some help from you because again, I'm sitting on approximately let's just call it $1 million in cash right now that I need to deploy before the end of the year.
Right.
Okay. What is the best strategy? Now, should I just go? Because right now, real estate is, I can buy cheap. Okay. I can go out. So, for instance, I live in a 2 million, my neighborhood, like all the houses on my street are worth about $2 million. Okay. My house is worth about 2.2 million. But it's brand new. Okay. There's a house down the road that is about the same size, but it's a little dated. Okay. They had it appraised at 1.8. Right now, they're willing to take 800,000 from me.
Jeez.
Okay. Because of the timing of the market. Should I go buy that in cash? Or should I go get a loan on it and buy two like that in cash?
Absolutely, get a loan and cost seg that baby as well. You don't have to just do the cost segs on the big buildings and the multifamilies. We oftentimes see that if you have an investment property or if you have a rental property that's worth over $300,000, there's oftentimes savings within that cost segregation study that could absolutely get a loan and take that baby down. Buy two of them.
Buy two of them. Okay, so that's your suggestion is I take the $1 million and I put, say, 50% down, 50% down. Maybe I get a high interest loan because I'm not going to be able to get traditional financing on it. I go get a high interest hard money loan on them. I buy both of them and I do a cost seg and I get that done before the 31st. Now, if each of those I buy, say if they're each $1 million, let's just round out the numbers, each $1 million. That's $2 million. Okay. What can that give me in a tax saving?
I bet you'd be looking pretty close to about $500,000 if the cost segs were done. Once again, without knowing and looking at the properties, I've seen your house. I've been to your house. It's beautiful. Yep. Based off of that street that you're living on, I have a hard time thinking that there's not $500,000 of savings in that example.
Incredible.
Massive.
Massive. Massive. Tommy, how do people learn about this stuff? Like, again, I wasted millions of dollars in tax bills, right? And this is probably one of my greatest shames. Not that I pay taxes. Listen, I'm an American citizen. I love America. I'm a patriot. I believe that taxes are important. They keep everything moving. But I'll tell you, there's a bunch of donkeys right now running our government. Okay. And this isn't to say I'm partisan. I could give a crap blue or red. I'm blood or crip. Don't matter to me. Okay. What matters to me is that nothing happens over there. Right. Nothing happens. It doesn't matter. Okay. At the end of the day, it's nothing happens. So I can't count on the government. I've never been able to count on the government to give me anything. They don't do anything for me, right?
No one cares about your money as much as
nobody does.
And here's where I think that it becomes tricky for everybody is everyone's situation is different. I know the way that you work and the way that you operate. You're just more, I'm going to go generate more income and make more money. And I think that's why you overpaid in taxes for years, was because you believed in yourself and knew you could just go make more money. But there's a lot of people that I talk to that are more conservative that are saying, I still want to put money into these retirement accounts. How can I write off my vehicle? What type of vehicle can I write off? So depending on your risk tolerance, I think that makes a major difference as well. There's years where I max out the IRA or the 401 or the retirement accounts, but the tax savings are not as great as anything that has depreciation involved. So real estate, vehicles, anything that you can depreciate and accelerate is going to give you not only that asset, but a massive tax savings on the bottom line for an annual basis, for sure.
I love it. Now, I want to talk a little bit about what can help move the soul a little bit, right? And it can't just all be about making money. You got to make an impact in the world. And it just so happened that a few weeks ago, Pace and I had the opportunity to hang out with Tim Tebow. You might be familiar with him from football, but Tim Tebow he's a beautiful man, and he has an incredible foundation where he goes in undercover, not him specifically, because he can't really be undercover because he's massive, but they hire undercover police officers to go in and they rescue young girls and boys from sex slavery.
Amazing.
And Pace and I each donated $150,000 each.
I think Steve was with you, right? Steve was
Steve
telling.
donated. Steve donated as well.
That's
Yep.
what he said. Yeah, that's awesome.
So we did a massive contribution to the Tim Tebow Foundation. Now, I didn't bring this up so that everybody can say, "Oh, congratulations for being a good guy and caring about children." That's just our heart did that. But I want to talk about what does a charitable contribution do to my tax situation
So
like that?
first of all, that's amazing. I love that you did that. I haven't met Tim personally, but from what Steve tells me, he said that it was amazing. He said he's an awesome person. He was
A beautiful man.
impressed. That's cool. So generally, you can deduct up to 50% of your adjusted gross income. So obviously, you make well over $300,000. There's no limitation. You're going to be able to write that off in full. In some cases, it'll be 20 to 30%. So depending on your income, those charitable.
Let's say my income's $5 million.
Yeah, $5 million, you could donate all you want. Donate up to $2 million and write those charitable contributions off for sure. Just make sure you're tracking them. But that's where I think it also looks at how do you pay Steve all these. At what point does it make sense to create a charity where you're giving back to your own cause as well, right?
This is why I bring it up.
I think it's awesome.
Because I understand that you guys can help me do that.
We don't do a lot of the nonprofit side, but we can definitely help with the strategy of where the money's going and what percentage you could donate if you choose to do so.
Okay. So let's talk about this just in terms of, the current situation. So I donate $150,000. Does that mean $150,000 comes off my tax bill?
Against that gross income, it doesn't mean you're getting 150 back, but it's going to deduct against your overall income.
150 off my income comes off. So basically I save 40% of that because I'm in the 40% tax bracket. Is that right?
Right.
So essentially 40% of 150K I don't pay now.
Correct.
Okay. Now, if I started my own foundation, am I limited to what that foundation can do? Like, let's just say, for instance, okay? Say, for instance, we decided to start a foundation where we provided scholarships to people who wanted to learn how to buy and sell real estate. And we put money into that foundation to help people pay for their education to learn real estate. And I was able to sponsor 1,000 people in their education. Could I create a nonprofit organization that sponsored people to learn how to make money for their financial futures?
Absolutely. You can set. So one thing that I know we're going to be doing more of these and more often. I have a contact of a nonprofit gentleman. His name's Mark. I can't remember his last name, but he's amazing. And he broke a lot of this stuff down for me. It has to be something that you are passionate about. You have to put the time, the energy, the effort, and make those scholarships happen. But absolutely that can work. And then eventually, if you have staff, if you're paying salaries or paying distributions, or if you're making contributions to your nonprofits, there's also ways that you can donate your property to your nonprofit to make it a deductible expense for the property. And maybe you're providing housing in addition to those scholarship opportunities. So real estate is one of the best areas to involve nonprofits at the levels that you're at, because you can really start to make an impact and donate those properties directly to the nonprofit as well. I don't know the specific details around the nonprofit side, but the point that I make is I can see if we can maybe even have him on for one of these sessions.
I'd love to bring him on, because awesome. What I'd like to create is to create a foundation where I would say Pace and I would each donate 50 of our mentorships or 100 of our mentorships, right? And say, okay, I'm going to put 100 astro flipping students through a scholarship. Pace is going to put 100 sub 2 students through a scholarship. This way, if a sub 2 student wanted to come in and take astro, but they couldn't afford it, or an astro student wanted to take sub 2 and they couldn't afford it, although both sub 2 and astro students make buku money, so they could afford it. But let's just say we wanted to give them a gift, right? Or there's people watching this live stream right now who are like, bro, I would do anything. I would give my testicle to be in one of these mentorships, or, you know, maybe if you don't have a testicle, maybe it's something else you'd give away, right? But you'd give something. You'd give up like a body part to be in this, to learn this stuff, right? So, and you know, we're passionate about this because this is what we do. This is our life, right? So I would love to create a foundation where Pace and I each donated a certain number of memberships, and we figure out how we can save taxes, help create more millionaires out there, and in the meantime, do a good deed. What are your thoughts on that?
I think it's amazing. I'm sure it's all totally doable. I'll have to get Mark involved to shake out the details, but I'm sure that's all doable. And there's probably a lot more exciting pieces to that. The nonprofit, we've focused so much on for-profit businesses over the last 10 years that I should be more well-versed with the nonprofits than I am. But usually we're just helping people write off the charitable contributions like you did. But from a nonprofit standpoint, I got to bring Mark in here so we can talk through the details, because when he was talking to me about it a couple of years ago, it's super exciting, especially for real estate investors, to be able to contribute money to those specific causes. And it's all totally doable stuff.
I 1,000% agree.
That's great.
Now I want to talk a little bit about tithing, because I tithe 10% of my money.
Okay.
And I don't get tax returns.
I get it.
I don't get tax receipts from the church. I don't get tax receipts from God, right? And so, how do I handle my tithing?
Track those. Where are they going out? What accounts are they coming out from? How are you paying them? The way that the IRS looks at it is you need an alibi, right? And that's why credit cards have been the greatest gift to tax planning in the last million years, is because it gives you an alibi to go back and show what those payments are for. So that 10% and that tithing, as long as you're tracking it and have the alibi, you're able to do that.
Guys, this is the reason why I bring this up, because in my hand, I'm holding a card, and I didn't have that card until I got to meet that man right there. Okay. Now, what I was doing was I was collecting all my money in my bank account, and then I was just spending out of my bank account. And what ended up happening is old Tommy boy over here said to me, "You're a dum-dum." And I said, why you calling me a dum-dum, bro? He's like, "You're not tracking any of your expenses." I'm like, how? You know how flipping busy I am? I ain't got time for this. He's like, "Okay, get a bookkeeper." I'm like, "Yeah, but then she's got to be in my jam, and she's going to be asking me all these questions, and I can barely answer Yvette's questions, and I can barely answer Emily's questions. I don't got time to answer somebody's questions about what I was doing at AMC and whether or not this was a tax write-off while I was trying to watch a flipping movie. And sometimes I take Jesse Burrell to the movies, and hanging out with him is a tax write-off. And sometimes I take my wife to the movies, and hanging out with her is not. So I can't answer these questions all the time, so that becomes brain damage for me. Is there a better way?" And he said there was. And I asked, "Well, what's that better way, bro?" He's like, "Well, first, how are you paying yourself?" I'm like, "I don't know. Money just comes." He's like, "You're not paying yourself in an LLC?" Duh, I'm not. So what they did is we created an LLC. Okay. Now that LLC is what gets paid. All of my money, whether it come from Keegley, whether it come from astro flipping, whether it come from affiliate income, whether it comes from events I do, whether it comes from speaking engagements I do, whether it comes from YouTube, whether it comes from, what is the other place I make some cash?
Your LLC is also taxed as an S corp as well.
It is
from the active income.
It is. Oh, and TV, A&E.
Oh,
so
right.
I get all that money comes in, and it all gets paid to Jamil Damji LLC. Okay. And then guess what that LLC has? A credit card. and here's the most beautiful thing that happened, guys. That credit card now is the only card I use when I'm making expenses. So if I'm out traveling with Pace and we're doing the world, you know, Pace and Jamil do America, and we're speaking and we're helping students and we're out on business, I got two cards on me all the time. You know, like Kevin Gates says, I got two phones, right? So I got two cards, one for the club and one for the load. And that's it. Okay, one is business and one is homies, and one is personal, and that's all I do. Okay, that's how I'm tracking my life. Now, thankfully, they were able to get me $15,000 in like immediate credit. I don't know if you guys are all going to be able to, qualify for that. God knows how your credit is or what that's all going to look like. So don't yell at me if you don't get that. Okay. But what it allows me to do is I use that credit card to make my expenses. And then you know what happens? I get points. And every month my LLC gets all this cash and I pay off that credit card. But I get to keep the points. So not only that, but now because of that damn card, we're going on a vacation to Mexico in December.
It's great.
So I got free vacations. I'm tracking my expenses, which is incredible. Then I'm also making all my money in the LLC. So now I'm not taking any of that cash in as ordinary income. Guys, are you writing notes here? Are you writing notes? Okay, now this isn't something that you're going to be able to learn. And what I'm telling you right now is not all of it. This is the reason why you have to click the link in the chat right now so that you can schedule a call with Prime Corporate Services, because they are professionals. These people will help you understand. I had no idea how this worked. I had no clue. And in fact, I had been paying an accountant for years who had never given me a single strategy. Shame on you, Joan. That's why you're not my accountant anymore. And if you're watching this video, I hope you feel bad. I hope you feel bad that you let me spend millions of unnecessary dollars in taxes if you could have just given me some advice. But no, I had to click on a link and talk to these guys before I was able to get that information. Why is it, Tommy, that accountants won't share with people these strategies? What the hell's wrong with them? Why don't they do it? Does the IRS pay them a kickback? Does an accountant make something extra for you to pay more taxes?
A lot of times they're just getting paid to file that return. I think another big one is paying your wife, paying your daughter. There's ways that you've been able to lower
income splitting
strategy to be able to lower that down and to even under 12,900, for instance. If Jamil wants to pay his daughter for helping with marketing or helping for something reasonable throughout the year, she doesn't have to pay taxes on that 12,900 or below, and Jamil still gets to write it off as well. So some of that strategy, the problem is also is people wait until January or February to tax plan, and it's just too late. That's why I'm happy we're doing this right now. November 16th, you have before the end of the year to talk about the tax planning. What's your situation? How much money have you generated? How many properties do you currently have? And what do you plan on doing before the end of the year? Does it make sense for you to pay some of your marketing up front to preload that so that it lowers your tax liability for 2022 to help scale your business into 2023? You can make those decisions now. A lot of what we do as an organization and as a company, if we can negotiate to pay our systems or to pay the softwares, anything that you're paying on a subscription basis.
Yeah, for instance, I've got a ton of students right now that are using Privy and Batch Leads to help them generate deals, right? So they pay a little bit of money on those subscriptions. Although the ROI on the subscriptions is incredibly high, they should be able to write those subscription costs off, right?
100%.
So essentially,
have options to pay in full. But what if if you had a great year this year and you're still paying for those subscriptions? If they have an option to pay a year up front, if you pay that right now or pay that next month, you write it off this year and you still use it all year next year. Depending on what your tax liability is going to be. For someone like yourself, Jamil, I'd say pay that year up front, lower the tax liability, and then you don't have to worry about it next year either.
The Sauce in the comments asked about what about school and training. So I don't know if you know this, Tommy, but Pace and I, we just recently traveled to the Bahamas.
That's right.
Did you hear about that?
I heard you had a blast on the jet skis.
I had a great time on the jet skis. So Pace and I have been interestingly investing with some different crews. You know, we had some limiting beliefs in our minds on what kind of returns were possible in life. And you know, we heard about this group that was, you know, one of the main people in the group is making like $1 million to $2 million a day.
Wow.
And he thought, this is impossible. And nobody makes that kind of money. This is, who are you, Bernie Madoff? You know? And so both Pace and I were incredibly skeptical, but our mutual friend Pete Vargas introduced us to an investment opportunity, and both Pace and I, we put $1 million in. Okay. So I put $1 million in. Pace puts $1 million in today, and I put my $1 million in on August 17th. Okay. Today, my million is 1.92.
Wow. That's awesome. That's
incredible, right?
Yeah, it's incredible.
So guess what we had to do? Pace and I got on a jet and we went to go learn how to make the money. Okay. We spent $75,000 going there. This is, I know DeSauce is like, how the hell is this? What are you doing, Jamil? Why are you saying all this? DeSauce, the reason I bring this up, okay, is we spent $75,000 to go learn the techniques on how to return and generate those kinds of returns. Okay. Can I write off the $75,000 on school, training, flights, even though I stayed in a 5-star hotel and I ate the best sushi ever? Okay. I flew in a jet. Can I write it off?
Absolutely.
So the government doesn't want me to fly economy only?
You're having fun while you're doing it, but it is all relative. Everything.
So I can write off a jet.
100%. Yeah, you can depreciate the jet. Matter of fact, you could buy the jet, depreciate it, and that's another way you could save some more money in taxes. Not only is the ride itself deductible, but purchasing that jet, depreciating that jet is also a deductible expense. So back to DeSauce's question here with school, training, astro flipping mentorship, a lot of times we don't want to attribute that to education, where they're looking for an accredited university or limiting how much you can write off. But research and development, startup expenses, organizational expenses. If anyone's watching this and you're just getting started, you haven't done a deal yet, there's $5,000 in startups expenses, $5,000 in organizational expenses. There's absolutely ways that you can make that 100% deductible. I know astro flipping is not 75 grand, but when I say it's relative, for you, of course, that becomes a deductible expense. It's relative to your income, where something like astro flipping that is not $75,000 also becomes a 100% deductible expense.
Incredible. So wait, if you're telling me if I work a W-2, say I work a W-2 job, I make $75,000 a year. Okay. And I invest in a mentorship that say cost me $7,000. Okay. Then I have, in addition to that, I have a software expense of $200 a month because I'm in an incredible, I don't have to spend any money in marketing because somebody taught me how to do this. Okay. In a good way. So if I make $75,000 a year, I'm paying taxes on that $75K, right?
Or you've already paid taxes and the IRS is investing with your money until you hopefully get a little tax return.
So are you saying that I could possibly, say for instance, I wanted to sign up for Sub 2 or I wanted to sign up for Astro or something like that, I could essentially use the money that I'm spending, that I'm going to pay the government in taxes, to reimburse me for what it's going to cost me to join a mentorship and get into a community that can change my life? Are you telling me that I could essentially, this could be a wash or almost free?
As long as you have taxable income, that's exactly what the point of that is, because the IRS rewards investors. It rewards entrepreneurs. The risk takers of the US get rewarded by investing into themselves and investing into their business. So if you have that W-2 income, even if you're driving Uber, Lyft, DoorDash, even if it's 1099, as long as you have taxable income, set up your LLC, make sure you're structured properly. We can help you with that on this link right below. but it's going to flow through to save you that 20 to 30% or whatever your taxable rate is. You write off the cost of the program against your income. It absolutely can be a deductible expense. And here's the other thing, you can show a loss 3 out of your first 5 years in business. I hope that's not the case. I hope everyone takes off and generates income. But when you invest into yourself and when you invest into your business, because LLCs are flow through and because the tax code incentivizes investors, it absolutely can be written off to either save you money in taxes or help you get a much larger tax return.
Bro, why don't they teach this in school?
Because algebra is too hard and algebra season never comes. Tax season's here every year. I don't know why they don't teach it. It's a combination of what do they want you to know? It's complicated, and I don't know. I wish it was more common knowledge because it's something that is going to be one of the largest expenses anyone has in their life, let alone entrepreneurs, is taxes. And you don't need to know all of it, but the more you understand how to play the game, the easier it is to win. Even cars, right? Vehicles. The last 3 vehicles that I've had, I've made money on them because they've weighed over 6,000 pounds. I've depreciated them in the first year. I've kept them for a couple years to make sure I don't have to pay back that depreciation. And by the time I sell them, the tax savings has saved me more money than the depreciation on the vehicle itself. So expenses and quote unquote investments that people say are not good investments that you need anyways, a lot of times if they're tied back to your business, can be deductible as well.
So does that mean you have to buy the vehicle in your business name? Because that's, can become problematic if you don't have business credit. Like this, I'd like to dive into that a little bit because, okay, let's just say, you buy a car. You want a new car. You need a new car, right? And you know that it's got to be over 6,000 pounds, but you just set up a company with LLC. You just set up your with Prime Corporate. You just set up an LLC with Prime Corporate. How can I go get a loan?
So funny story about this. We've put about 40,000 clients through our business credit program, and right now we're averaging about $4 million a month in business credit and corporate funding. It's pretty remarkable. But once you have a credit profile that's 80 to 85 on the range, Mercedes-Benz, out of all dealerships, will oftentimes approve the purchase of a vehicle. So we had a client that went through our credit profile in 4 months, got that 80 to 85, went and bought a Mercedes-Benz and tanked his score. So I don't recommend doing that. If you need to purchase a vehicle, you can still purchase it under your name if that makes more sense, and that's where the income is currently. And if it's business related, you can write off percentages of the vehicle. So it doesn't have to be 100% designated for the vehicle.
Mm-hmm.
It can be 50%, 70%, 90%. And if you don't want a 6,000 pound vehicle, or if you have no use for it, you can also track the mileage and write off the mileage of what you use for your business as well. So real estate is an area that our accountants and our CPAs are constantly looking for real estate investors and how to write off their vehicle, because you need it. You need it to check out your properties. You need it to go look at properties. You need it to go to meetups and events. So
speaking of events, December 3rd, you're going to be in Phoenix, Arizona, right?
I wasn't planning on it, but if I need to be, let's do it.
Well, the reason being is on December 2nd, Pace and I are holding the joint Astro and Sub 2 Golden Ticket event.
Nice. That
leads into the December 3rd event of the season 2 premiere of Triple Digit Flip. Now, that season 2 premiere is going to be the largest networking event of the year.
Sweet.
So my question is, A, will you be there?
I'm coming. I'll be there.
Okay. B, Can everybody who's watching this that's attending the premiere and the golden ticket event write it off?
Oh yeah, we're going there for a bit. Not only are we writing off the trip, the travel, the stay, but you're going to meet cool people. You're going to go out to lunch with them. You're going to go out to dinner with them. Business meals are 100% deductible until the end of the year. It looks like they're going to change it back to 50% next year. So the meals, everything included. If I'm going for business. I know we're going to have a good time, and I know that we're going to get chicken wings or sushi at some point. But we're writing all of it off, baby. December 2nd, December 3rd.
Yes, sir.
All right. We'll make it happen. That sounds good.
Please, extend the invitation to the family. Make sure that Steve is there.
Cool.
But I'm absolutely anybody who is an astro flipping student. If you are an astro flipping student, if you are a sub 2 student, you are automatically invited to the premiere. Automatically invited. If you are an astro flipping student or a sub 2 student, you are invited to the premiere. If you are trying to get to the golden ticket event, you already know how you get invited to that. And you will be reached out to by our support staff to get your ticket to the golden ticket event. But all astro flipping students and all sub 2 students are invited to the premiere. And we just found out right now that it is a tax write-off. Holy flippin' moly. So you're going to be able to come down to Phoenix, Arizona, hang out with famous rappers, hang out with celebrity TV hosts, hang out with Tommy from PCS, a celebrity in his own right. You're going to be able to network with some of the greatest real estate investors in the entire country, and you're going to be able to do it as a tax write-off. So essentially, you're going to get paid to do it.
Are you rapping?
I'm not rapping, but you're a fan of Tupac, right?
Oh, you know I love Tupac.
You know who the Outlaws are?
Yes, I know who the Outlaws are.
Well, you're going to meet him in person.
Really?
Hell yeah, bro. I couldn't have my second season premiere and not have my heroes rap.
Wow, that's awesome. That'll be cool.
Hell yeah, dog.
Hey, make sure they know they can write it off as well.
Oh yeah, they know. They
Everyone
know.
can write it off.
Everybody, you get a write off. 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 It's like everybody gets a write off.
The Oprah of deductions. Yes, absolutely. All of that is deductible expense.
I think it's like it's pretty dope, man. Like this is the part of life that I love the most, right? It's how do we figure out how to live life to the fullest and do it without paying taxes.
One of the coolest things that you and Pace have done is made business partners your homies. If you can do business with your homies, the way that you guys travel, which by the way, I asked Emily the other day, how do you do it? But the amount that you travel, the time that you spend, being able to enjoy it and invest with people that you truly love. A lot of people that work within our organization, I genuinely love, I genuinely care about. I rent my house out up to 14 days a year to take out the Augusta rule, to have a barbecue, to have a meeting, to have something where my corporation is charging me to rent out my house, to have a get together with people that I truly love, to write it off against my income, to save thousands, if not tens of thousands of dollars in taxes.
Hold on. Let me ask you this question. So I have a mastermind every quarter, okay? And people come to my house and people come and stay here. So I'd say at least 15 days a year my house is rented out and for business uses, okay? Are you telling me that I can get a deduction for this?
Up to 14 days a year. You can write that you can write it off without having to claim the taxes on the business side.
But I don't have. So what can I write off? Because I don't have a mortgage on my house. So what can I expense? How much taxes can this save me?
So Jamil Damji LLC is going to be charging Jamil for the space. Now you can't just rent out a room. You got to rent out the whole
house. Yeah, and I should. And at the going rate of my house, this house would probably rent. What do you say this house rents for? $1,500 a night,
I would say at least.
right? Let's call it 2K.
Sure.
2K a night.
All right.
So 14 days, that's $28,000.
$28,000 in a deductible expense. Now, we have to have the paperwork, we have to have the document. I'm sure you've probably heard of the Augusta. Do you know how the Augusta rule came about?
No, sir. I don't know anything about it.
So in the 70s, actually, when the Masters golf tournament would go to Augusta, all these people that were around the golf course would leave because it was so chaotic, and they would just rent their houses out for ridiculous prices for those 14 days. It ended up going as far to DC, where they approved and call it the Augusta rule, where you can rent your house out up to 14 days without claiming it as a taxable event or claiming it as income. So you can do that up to 14 days, write it off against the income. And I think 2,000 is very reasonable for that beautiful home you're in.
Damn. Okay, so I write a lease. I write a lease up from Jamil Damji to Jamil Damji LLC. I pay myself for the days, and that's it. Now I got another deduction.
It's got to be reasonable in comparison to what's available around you. But if you were to rent out the Four Seasons, if you were to rent out something comparable next to you, you've got a beautiful home, you got a pool. It's a
6,000 square foot house.
It's a retreat. It's beautiful.
Shiz.
Boom, boom, boom.
Guys, this is what I'm talking about, right? It's learning and understanding. How do we maximize our processes? How do we maximize and retain more of our income? Now, people were asking in the comments here, Tommy, did we make a mistake calling my LLC Jamil Damji LLC? Apparently, you're not supposed to name your LLC in your own name. Is that a rule? Why did I break it?
Hey, this is an educated group that's following right now, because Jamil's LLC is not really Jamil Damji LLC. Yes, we want to keep that separate, and we want, from an anonymity standpoint, giving yourself the privacy. Let's keep the names off of the business names. Thank you for that. I love this community for that reason, holding us accountable.
Yeah, guys, of course, you have to understand that for the purposes of being on the internet, we have to be a little bit, we have to cloak a bit, right? Because there's thousands of people watch these things, and so we gotta know what's up. We gotta be good. Incredible. Okay, Tommy, give me some more tips, because we're going to open this up to Q&A before we end today, and I want just one more nugget for our crew here before we hit Q&A.
So for those of you that pay your own insurance or have a job or employment that offers insurance, call your insurance provider and ask them if you qualify for a health savings account. If you don't have a health savings account and your insurance qualifies for a health savings account, please do that before the end of the year. If you're single, you can put about $3,600 into it. If you're married, it's about $7,200, $7,500, I think, next year. But it's one of the only deductions that you get a ×3 deduction. So I'll use myself as the example. I'm married. I put $7,500 into it, which is a deductible expense. If I use it, if my wife uses it, she goes to the doctor with our daughter, she uses it. So I get the $7,500 coming out. So it's deductible going in, it's deductible going out, and then I'm writing off the copays and anything that's medically related, in addition to the premiums and everything insurance related as well. Part of being self-employed, and part of what's hard about being self-employed, insurance is one of those areas. So it's an amazing opportunity to maximize from a tax standpoint. If you don't have a health savings account, make sure your insurance provider qualifies and put some money into that account so you can have an additional deduction.
Phenomenal.
Cool.
Can you go get massages at Massage Envy and use your health savings account?
I think you might be able to. Don't quote me on that, but I don't. You're stiff. You're stiff. You got to rub it out. I don't know.
I mean, it's not that kind of massage.
Oh, got it. I don't know that.
No, it's a Massage Envy massage. It's a regular, regular massage.
I would assume some of
I got my neck hurts.
But
I was in a car accident. There are no tickets for the premiere. If you are an astro flipping student or a sub 2 student, you are invited, and you will receive details on how to come to the event through the astro flipping and sub 2 communities. You'll get obviously all that detail emailed and sent to you. So just be available. Be in Phoenix, Arizona, December 3rd if you are coming to the premiere. Be in Phoenix, Arizona, December 2nd if you are coming to the Golden Ticket event and the premiere. If you are not an astro flipping student, if you are not a sub 2 student and you would like to come to the premiere, how you can attend would be to send me a DM on Instagram and tell me why you want to come. Tell me why you want to come, and I will read your case. And if I have the availability to let you come, I will let you come. Awesome. Mark Hansen said, I bought my first property this year in my name because I'm a dumbass, and I spent $75,000 on a gut out reno. What can I write off with the reno cost? Should I start an LLC and sell it to the LLC? Great question.
I'm assuming that this is an investment property, and if that's the case, we can deed it over to the LLC. Track all of those expenses. Another thing to keep in mind, repairs are deductible, improvements are not, because you're increasing the value of the overall home. So for example, I had to fix something outside of the patio of my house, and it was a repair. It was not an improvement, right? Be very, very clear and intentional. Where it sounds like this is clearly an overall repair, just track those expenses to make sure you can itemize them, but we can absolutely get those over into the LLC with a quick claim deed, or make sure you have the privacy and the protection, Mark.
Amazing. Hey, Tommy, I have an LLC in California that you guys set up for me. Can I wholesale in a different state with that same LLC?
What's up, Brent? Yes, you absolutely can. Oftentimes we'll want to do a foreign entity form from a tax standpoint, just so that you can make sure that tax-wise you're crossing your T's and dotting your I's. But absolutely, you can use that. If you want to set up another one in the state you're doing business in, or if you're doing a lot of...
Is it smarter too? I always tell people it's smarter to set up an LLC in every state that you're working in. And that's just because I never wanted to deal with the foreign entity crap. But maybe I'm wrong, Tommy. Enlighten us about that.
It just depends on how much business you're doing in the state. I think that a lot of the reason that you've done that is because you do a lot of business in a lot of states, and it just makes more sense to file based off the income that you make in the state you're doing business.
Yes.
But if, for example, Brent's doing a one-off deal in Arizona and it came across his lap and that's not his primary market, then we don't have to do it. It is an option, though. It just depends on how many deals you're going to do and what you want to use it for long term, I would say. If you're going to hold on to things long term, then why not have an LLC in that state, so that you can just have a tax form that flows through and you can have the profit and loss in the other state that you're doing business. But if it's a one-off wholesale deal, you can use your California and do the foreign entity form to make it a little bit easier on you.
If I work out of my home, yeah, go ahead. I like this one. If someone's business is registered to their home, can they still use the Augusta rule?
I can't answer this question, because if it's your primary home, oftentimes the business shouldn't necessarily be registered to it. You probably have a home office that you're writing off. If it's an investment property, that's no problem. You can do that very easily. Usually there is a way to make this happen, Michael. It's a great question. I see what you're doing here. There's likely a way for the Augusta rule to be able to work. Run that by your accountant or your CPA directly to make sure you're not crossing yourself up, but I'm sure there's a way to make it happen.
Should you pay your employees out of a holding company or the LLC doing business?
Another good one. So you can do either or. But what I ask is, so the money either needs to flow up or it needs to flow down. So the question is, if you're paying yourself into that holding company, we probably want the holding company to be an LLC taxed as an S corp. so that you can pay out salaries and distributions from the holding company. But if the subsidiaries are paying themselves out and the money's going down instead of up, just make sure you're doing the same thing every time so you're not making it more difficult on yourself from a tracking standpoint.
I have an LLC and a holding company set up with the help of PCS. Do I need a bank account for both? And do I get DUNS for both? Or which one?
I usually when you're building, so I have a bank account for all of my entities. My holding company has a bank account. All my subsidiaries have a separate bank account. I would recommend having bank accounts for them because it's very easy and you never know when you're going to need it, right? As far as the DUNS number is concerned, I only have a DUNS number off of one of my entities because I'd rather build one very large line of credit that I can lend to my other entities or my subsidiaries if I choose to do so. You can have a DUNS number for all of them, but it's more to manage. It's more work. For me, I'd rather keep it a little bit easier. I know Jamil opted to do the same thing where built the credit profile off of one. And if you want to lend to the others, you have the ability to do so.
Guys, this has been a phenomenal hour that we got to spend with PCS. And we're going to continue to do these all the time because this is an ongoing process. You don't optimize and make yourself efficient taxation wise, corporate structurally wise, even just in terms of how to create the most anonymity for yourself and your business. You don't do that overnight. It takes time, it takes knowledge. But here's the number one thing you need to do. There is a link. Okay, it's www.primecorporateservices.com/JamilDamji. Click on that link and set up an appointment with Prime Corporate Services and have a conversation with these guys. Tell them that you came because of this live and they will give you a special, I don't know, what do you guys give them, a hot dog or something?
Yeah, hot dogs and nachos for everybody. It's a free call. It's a free strategy session. And if you already are working with us, reach out to your contacts, send them an email if you have questions around anything that we talked about here today. But go into that call and know that it's for you, right? If you're brand new, tell us you're brand new. If you already have 5 businesses and you're doing, 10 deals a month, let us know where you are so you get the most out of that call. But it is a free consultation. There are discounted rates for anyone that comes from Jamil's link on the entity itself. But more than anything, we're here to bring value. Thank you for the questions. They were all great questions. But that free call is just more value to you to understand more about your situation. Everyone's situation is so different. Just tell us up front where you are and what you're trying to take away.
Guys, we appreciate you guys tuning in, and we'll see you. We'll be doing these often. So come back. Make sure you book your call with PCS. And Tommy, I appreciate your time, bro.
You're the man. Great seeing you.
You're the man, homie.